be definitely covering that VA home loan and really kind of understanding those advantages. As you kind of progress and you're planning towards retirement, of course you want to purchase a home, you be buying and selling real estate. So I'm gonna go over a few of the traditional things and some other important features as well. So of course there's a special program for service members, veterans, and eligible spouses, right? Looking to purchase a home. It's gonna offer very unique benefits and advantages for you guys to utilize your VA loan. So today I'll be breaking up some of the myths in regards to doing that, okay? So some of the key benefits first is that there's no down payment required for that VA loan. I know you guys hear about that quite a lot. And something else that makes the VA loan a lot more affordable is that you don't have to pay any mortgage insurance on that loan, right? So mortgage insurance is traditionally required if you're putting less than 20% down on a property. So that can be, $300, $400, $500 added to the payment of your mortgage. So that's huge when you're utilizing that VA loan. You do not have to have that mortgage insurance. It's already covered. Something that's going on right now, of course, that you hear all over the place is that housing affordability is really chaotic right now, right? It's very, hard because of the interest rates and different things like that. A very much so key advantage of that VA loan is that it's going to be assumable, right? So if you're buying a home from someone else that has a VA loan, you could actually assume their interest rate, right? So if they have a 3% interest rate, you can end up having a 3% interest rate. And there's some key factors in there that I'll get to kind of explain that to you. Another thing is that the VA loan has no loan limit, okay? So I know, homes here are very expensive, right? So, if you're looking to purchase a home $1 million plus, you can utilize that with your VA loan, especially if you have the full entitlement, which means you haven't purchased another property utilizing that VA loan. If you have the full entitlement of that VA loan, you can purchase $1, $2, $3, $5 million, even more than that. It just depends on the particular bank that you're utilizing. They'll put different overlays and requirements on that. A lot of them cap it at around 5 million. There's other banks that would actually go a lot higher than that. So imagine being able to purchase a house in that type of range with no down payment and still not having to pay that mortgage insurance. Again, the VA loan is very powerful because you're actually able to do that. What I want to go into is figuring out different ways that you can actually take advantage and still have home ownership in this current market, okay? So mainly what you want to look at is that how you actually structure the deal. Whether you're looking to buy a home or you're looking to sell a home, the way the deal is structured is going to be most important, okay? So again, when you're talking about assuming a VA loan, right? And when you're looking at that advantage, okay? So of course you don't want to go assume a VA loan of someone that purchased their home 10, 20 years ago, right? Reason why you wouldn't want to do that is because they may only owe $200,000 on there and they're selling it for $850. Well, you would have to come up with that difference, right? But if you're looking at someone that purchased a home within the last 2 years, especially during that COVID period, chances are they purchased in 2021, 2022. They had that really low interest rate, could be 2, 3%. But if you notice, the value of the home hasn't went up much, right? So they could have purchased the home for $850,000 and they're trying to sell it for right around that same price. Those are the VA loans you would be looking to assume, because now you don't have to worry about coming in with a big down payment and probably no down payment at all, because the purchase price and what they owe is pretty much adds up to the same amount, right? And especially if you can kind of talk to some of your people that you already know and get a deal off market, because then if you're able to kind of cut out those realtor fees, that helps as well, because you have a lot of active duty members that may be relocating, right? They just bought that house 2021, 2022. If they were to try to sell that house right now and they had to pay $60,000, $70,000 in realtor fees, they'll be underwater, right? But guess what? You can go and get that property utilizing your VA loan, and both of you guys just helped each other out in a tremendous way, right? So that's the power of kind of knowing the different ways to actually structure those deals. Another way when we're kind of thinking about that is also looking at other terms as well as seller financing, because you might be in a situation here where you know someone that purchased a home pretty much when they got into service, right? That home could be paid off or almost paid off. Well, at that point, they could make their own rules on you purchasing that home, or whether if you're in that situation and you're looking to sell your home. So that gives a lot more flexibility, right? Because now you could have another active duty or veteran purchase that home, and then they don't have to meet the same income requirements, different things like that, in the way you structure a deal. So seller financing can be very powerful for you as a seller and also you as a buyer, because you guys are going to make the rules and you're not going to actually have the bank influence what you can and cannot do. Again, the VA loan is one of the most powerful tools, and that's mainly what we want you to know. So again, an assumable loan is a very good advantage. Seller financing and just utilizing your military network is going to be key for home ownership. You know, a lot of people are complaining about the interest rates. One of the things that you have to really look at is that the way retirement pay is structured is not really structured for you to have a mortgage payment when you retire, because you're not going to be able to afford to pay, you know, $6,100, or even looking at, if you're renting a property, actually looking at the rising cost of rents while you retire, right? So you want to definitely make sure that you're purchasing a home sooner than later. And you have a lot of abilities to kind of refinance that. So even if you end up in a situation with the interest rate higher than you may have wanted, the VA loan has a very good program where you're able to refinance with very minimal fees. And so if you end up with an interest rate of 5 or 6%, rates drop tremendously, you can go ahead and refinance that with very minimal paperwork, and they're not even looking at your credit a lot of times, or doing an appraisal or anything like that. So there's a lot of different powerful tools. And also, I know you guys have a Navy Federal here on base. They have a lot of programs as far as of course, the VA loan, but even outside of that as well, that you could take advantage of with no down payment programs for yourself and also your family members that you got qualified. Because of the sacrifices and different things that you made, that extends out to all of your family and loved ones as well. And we're definitely here to kind of answer questions and do all that regarding that real estate side. So the best way to find an assumable loan would be through that network of kind of working with other veterans, right? And just asking questions, because literally if a house is on the market, you want to make sure you have a highly trained realtor. So if it says it's accepting a VA loan, a lot of times that seller's agent doesn't know about assumable loans. They may not have actually listed that as an option, right? But let's say this house has been on the market 100 days, you know, they're chomping at the bit trying to sell that home. If your agent or you come with that option and say, hey, you know, I'm active duty member, I'm a veteran, I would like to assume that loan, a lot of times they're going to say, what's that? And you're going to either need to provide the education or have that realtor that knows about that could walk them through that deal, right? Of how to actually do that. So pretty much with that assumable loan, it's literally, instead of them applying with the outside lender, whoever owns the note on your mortgage, they're just going and applying and getting approved with them. So chances are, if they got approved by another lender, your lender is going to approve them as well. It's just a matter of doing that paperwork and just knowing that the person has a VA loan on that property. So that'll be the one question that you'll want to ask if you're looking at a certain property. Hey, does this property already have a VA loan on it? And then you'll ask what they owe on the property, and you'll look at that based on the purchase price. And if it's, you know, too far for you to come up with the difference, well, that assumable wouldn't necessarily work in that situation, and you'll kind of look from there, right? Because you'll want them to be selling the house at somewhere, you know, near what that purchase price is going to be, unless you wanted to come with a larger down payment, which you can do that two different ways. You can do that out of cash out of your pocket, or you can actually get a second loan on the property to cover that difference. So if they're looking to sell for $1 million and they owe $800,000, you can get a second mortgage when you're purchasing to cover that $200,000 difference, right? So if you wanted to do that, but then that's going to be at a higher interest rate. So then now at that point, you have to look at the cost benefit of doing that. So that's why I don't even really throw that out there too much. I'm always telling my clients to look at properties that, you know, it's kind of here and here as far as what they owe versus what that purchase price is going to be. Unless that seller is looking to do seller financing, then now you could make up some different terms where, let's say, again, they're trying to sell it for $1 million, and they owe $800,000, they may be willing to do some creative things where they get you in the house with an $800,000 loan, and they're actually willing to offer that second note to you to cover that without you having to go to an outside bank, and that will result in no interest on that extra $200,000 or low interest based on whatever you guys negotiate there, right? Because right now, because of the interest rates, homes have been very, very hard to sell. So if you're able to have those different creativities, that's going to allow you to kind of get in the market and do a lot of different things there.